If you're tired of paying your landlord's mortgage and want to achieve the goal of home ownership, you've come to the right place. Hi, my name is John Charbonneau. I'm an accredited mortgage professional with TMG, the Mortgage Group, and I will be your host for our first-time homebuyer webinar. For many Canadians, home ownership is considered a sound investment, and for the majority it represents the pinnacle of personal and financial success. Purchasing a home can also seem like a daunting and overwhelming job. It's probably the biggest emotional and financial investment decision you will ever make. Before you start looking at homes, you'll want to do a little bit of homework. Our webinar will provide the early insights you need to have a successful and enjoyable first-time home buying experience. As promised, we will have 4 presenters: a realtor who specializes in working with first-time home buyers, a home inspector, a lawyer, and myself talking about mortgages and getting pre-approved. Below the screen, you will see a comment and question box. We encourage you to send us your questions. Now, there's a good chance we will cover your question in the material we have already prepared. If we don't have time to get to your questions during the webinar, we will get back to you by email with an answer. Our first presenter is Kevin Boyle of besthomebuysinbc.com. Kevin has been a licensed realtor with Sutton Premier Realty for 10 years and brings a wealth of real estate knowledge and a very good understanding of how to help first-time home buyers navigate the home buying process. Let's get started and welcome Kevin Boyle.
Thank you, John, and welcome everyone. Ladies and gentlemen, my name is Kevin Boyle. I've been a professional realtor for the past 10 years, and my specialty is helping first-time home buyers like yourself. For the next 15 minutes, not only will I take you through my real estate home buying program, I will also share with you the 5 most common mistakes made by most first-time home buyers and what you can do to avoid them. I strongly believe that the quality of your real estate experience is going to be directly proportional to how well you're prepared and the quality of the person you choose to work with as your realtor. This presentation is designed to educate you on some of the pitfalls you need to watch out for when it comes to buying a home, and to give you the tools to help ensure that your home buying experience is a smooth and enjoyable one. We have a lot of great information to cover, so let's get started. The 5 most common mistakes most of today's first-time home buyers make and how to avoid them. Mistake number 1, not understanding the listing process and why having your own realtor is in your best interest. It's a fact. The best properties, those listed at a good price and in a good location, generally sell within a few days. What most people don't realize is that the internet empowers realtors even more in helping them find their clients the best properties before the general public. That's because realtors have access to new listings 2 to 3 days before the general public. There are 113 real estate boards across Canada, and they submit their listings to one central listing service in Ottawa called Realtor.ca, which most people know by the old name MLS.ca. From the time I submit my new listing to my local real estate board and the time it gets on the public MLS sites, it takes an average of between 3 to 4 days. Have you ever called on a property and been disappointed because it just sold? Chances are that buyer was working with their own realtor who specialized in that area. When my office or I get a hot new listing with a motivated seller, the first people we call are our own clients first. Because as a realtor, if I can sell my listing to one of my clients, I make more in commission. My client wins because the early bird truly does get the worm first in real estate, and I win because I make more money. So you have to ask yourself, if you're serious about purchasing a property, wouldn't you want to know about new listings as soon as they hit the market? So this is how the listing process works. On day 1, I sit down with my seller and I do the paperwork to list their home. Days 1 and 2, I'll contact people that are in my sphere that I'm working with that have been to my website and I know that they're interested in that kind of listing, and I'll give them a call and let them know about it. On day 2, I'll submit my listing to the real estate board. Well, what happens is on day 3 or 4, the listing actually hits the Realtor MLS. And there is a 2 to 3 day delay before the listing actually hits the public MLS that I was telling you about that's in Ottawa, Ontario. So what happens is it gives a realtor who's working with his clients 3 to 4 days lead time to try and get his own clients and make them more commission. On day 5 to 7, the listing is sent to Ottawa, Ontario, and it's published on the public MLS site. On day 5 to 7, that's generally when most realtors will have their first open house. And if they use print media, usually you're going to find the listing gets into print media on the day 12, day 14. Now, what I wanted to do with this slide is I wanted to show you how realtors actually look for properties, because a realtor MLS is quite a bit different than the public MLS. The first day, I've always found this, that the first few days of looking for properties is fun. It's like hunting for treasure. But after a while, you'll find that you can waste a lot of time and energy looking through countless websites and hundreds of listings. It's like looking for a needle in a haystack. That's because public MLS sites and most realtors' websites are just not set up to meet the specific search requirements for your family's unique needs. If you have children and you want a home with a decent-sized yard, or you want a quiet cul-de-sac, or you want a townhome that's not age-restricted, or you want something close to a school, do you really want to look at hundreds and hundreds of listings day after day after day? But there's another reason. All the best deals get snapped up by realtors and their clients. What's left on public MLS are the homes that they pass on. So I'm going to show you an example of the screen that I see when I look for properties for my clients. This is my search engine. As you can see, there are quite a few different parameters I can use to help find properties for my clients that are not available on public MLS sites. On this screen, here if you look closely, I can search in a particular area or city. I can search for whether a property is a townhouse, condo, or a single-family home, whether it's a rancher, whether it's on one level or not. I can look for split levels, 2 stories. If you want more privacy and you want an end unit, I can help you find that. I can search by price, exact square footage, age, whether a complex allows pets or not. And if we go to the next slide, you'll see that there are even more parameters I can use to help you find the right home. So on this slide here, what you'll see is I'm looking for a townhome for a client, and I can look in a particular strata complex. So if I want something that's in the Fraser view, I can just put in Fraser and it'll put up all the different complexes that include the word Fraser. So if you're looking for a home with a west or a southwest facing backyard, I can look for homes like that for you as well. If you don't want a home with a stucco exterior, I can actually exclude all homes with stucco. If you want a large lot, or you need the master bedroom to be on the main floor, or perhaps you don't want a huge strata fee, I can actually set how much of a strata fee you're willing to go up to. So $200 or $250. Well, the other thing is if you also look at this screen, is if I have a client that wants a fenced yard, if they want it to be private. So there's so many different parameters. In fact, there's over 72 different parameters I can use to help find you the right home as soon as it's listed. There's just too many actually parameters to show right here, but hopefully you get the idea. It's a powerful search engine light years ahead of what is available on MLS.ca or Realtor.ca. This slide here is to give you an idea of the flexibility I have to search a particular area, neighborhood, or city. Here I've actually circled an area for my client in Walnut Grove because they wanted something close to the high school. I can also search using a square. I'm not sure why it got cut off here. I do apologize for that. I can select multiple areas, multiple neighborhoods, and multiple cities. Mistake number 2. Assuming you're going to save on the commission buying a home without your own realtor. This is quite common actually. And there's a couple of really bad mistakes in thinking this way. Number 1, when I sit down with a home seller to list their home, the first 3 questions most home sellers ask me is, what price should we list at? What commission do you charge? And if you sell our home to one of your own clients or someone who's not using their own realtor, how much of our commission are you going to give back to us? They're not interested in giving that discount to you. They're interested in keeping that money for themselves because it's their money. You see, the seller is paying that commission. They don't want to give it to you as a price discount. They want it back for themselves. So yes, you will probably save a couple $1,000s in commissions, but I typically negotiate an average of $5,000 to $10,000 off of the asking price. A lot more money than what you're going to save. So you actually generally end up with less of a savings. Number 2, do you really think that the seller's realtor is going to tell you if the seller listed their property too high? If the seller lives in a good or a bad neighborhood? If you think yes to both of those questions, I ask you to take a moment and really think about that. The seller's realtor's job is to sell that property for the highest selling price possible for their client, the seller, not you. It's not in the seller's realtor's best interest or the seller's to disclose to you anything more than necessary to help them sell that home for as much money as possible. Mistake number 3. Because you found the right property does not mean that you found the right realtor. I cannot stress this loudly enough. Despite what you might have been told by anyone, the realtor who is advertising and selling that property is working for the seller, and when you walk in, you are the third wheel to that transaction, and you have not checked their references, and you have no history with that realtor. You know what? Do a search on YouTube under Kevin Boyle Realtor. Unfortunately, I don't have the time today to share with you my own realtor history, my own realtor horror story, but it's on there, and all I can say is, don't make the same mistakes I made. Check references. What I'm about to tell you, you probably won't believe. I know for me, I find this quite unbelievable. But what most people don't realize is that there are a lot of part-time realtors out there. There are over 10,000 realtors in the Greater Vancouver area and the Fraser Valley, and a lot of them are part-time. People who get into real estate, they think it's easy money because of the high commissions. What they didn't realize is what a tough business real estate is. 95% of realtors do not make it past their first year. The dropout rate is astronomical because most people can't make money at it. Expenses are high, and living month to month on a full commission is hard. 75% of the average realtors out there only do 3 transactions per year, while the top 25% of all realtors do an average of 15 transactions per year. And like I said at the beginning of this slide, I can't believe those statistics, but from my office, I know that they're to be true. There are a lot of realtors out there that are doing this part-time. And if you're curious about me, well, this year to date, I've done 21 transactions so far. I've been a realtor for the past 10 years, and yes, I absolutely love what I do. It's a huge mistake to assume that all realtors are the same, or that because someone is nice that they make a good realtor. Yes, what most realtors do is basically the same, but how we do it varies widely from realtor to realtor depending on their knowledge, their expertise, and how long they've been in the business. Nowhere is this more apparent than when you're caught in the middle of a home deal gone bad and you're stuck with a poor or inexperienced realtor who's doing maybe 3 transactions a year. And when I say stuck, I mean stuck. As a buyer using a realtor, it costs you absolutely nothing. So no, why not use the best? Always, always, always check references. I always say, if they're so good that their clients should be raving about them. I've learned this the hard way. I've asked people for references, and they'll come back and they'll say, well, I value my client's privacy, which, pardon the pun, is a bunch of horse hockey. My clients love talking to other people about the quality of service I provide. They want to help me succeed in this business. Anyone who tells you that they can't or won't provide you with references doesn't deserve your trust, and they certainly don't deserve your business. Imagine yourself sitting in a dentist chair and the dentist saying, oh, by the way, you're my 3rd client this year. I haven't seen anyone for the past 6 months, but don't worry, I've gone to school, I'm licensed, but trust me, I'm really good at what I do. Now, my question to you is, if you're so good at what you do, then why have you only had 3 people come to see you in this past year? If you're so good at what you do, how come you're not getting referrals and having success in your chosen craft? The realtor you choose to work with is going to negotiate the best deal for you on your behalf. Doesn't it make sense to get the best possible realtor you can get to represent your interest in what will probably be the biggest single transaction of your life? So what you want to do is you want to create a list of must-have features. You want to know the neighborhood that you want to live in, the price that you can budget and comfortably live with, how many bedrooms, bathrooms, whether you want parking for 2 cars. And then you want to filter it down to a list of what would be nice features: a double garage, a large fenced yard, update appliances, things like that. Be realistic about your budget and about what you can afford right now, because your first home is actually usually a stepping stone to your dream home later. Know all the costs that are involved. Ask your realtor for a detailed breakdown. You know, if you want, I'm more than happy to sit down with you and your significant other over coffee and talk about everything you need to know about the home buying process. You know, I remember when my first experience with my first realtor, and he didn't tell me anything. When I asked him about it, he said, "Well, you never asked me." And I said, "Well, I've never done this before. I don't know what questions to ask." And I told him, "That's why I'm relying on you." Well, I vowed that I would never be that guy, that I would help educate you, my client, and make sure you had all the information to make the best decision for you and your family. So we'll sit down, we'll discuss the home inspector, when they come in, what they do. We'll discuss property taxes, how they're paid, when they're due. We'll discuss lawyer notary fees, your down payment, GST, whether it's payable or not, and any fix-up and renovations you might want to do. We'll also discuss subjects and documents that you will require and you'll want to see. We'll discuss your financing, the property disclosure statement, what it means, what has to be disclosed and what won't be disclosed, the title search, what that is, a site survey certificate, when it's required, Form B, strata minutes, when a deposit is due, when it's payable, to who and how much. So there's so much for us to cover, and that's why you want an experienced realtor. Mistake number 4. If it's not in writing, it does not exist in real estate. This is a legally binding contract. Again, this is a very common mistake for new or inexperienced realtors or first-time home buyers. Did you know that the seller is under no obligation to clean the premises before you take possession? If it's not included in the contract in writing, the seller is under no obligation to clean the home for you. And if they do, it's only a courtesy. Cleaning the home is not a standard part of a contract. You or your realtor need to write it in. So remember, if it's not in writing, it does not exist. Well, what else are you missing or your realtor is missing? That's where the experienced realtor helps, to make sure that everything that you need to protect you is in that contract and it's in writing. Mistake number 5. Assuming that the seller's realtor has a duty of full disclosure to you as a buyer. That's a very common mistake. This is actually a quite common mistake of inexperienced or lazy realtors, as once again, this is something that I experienced firsthand when I tried to purchase my first home. Again, I just didn't know any better. But sellers' realtors have no obligation to disclose anything if they are not directly asked a question. So, what happened to me? My wife and I found this great home. We needed a day to call our bank and make sure everything was good, so we waited a day to the next day. We came back the next day, actually, and the home had been sold. We were livid that we weren't told that an offer had come in the night before, but there was nothing we could do. The seller's realtor was under no obligation to tell us or our realtor, who was inexperienced and didn't ask on our behalf. And because we weren't really ready, actually, it was our fault as well. So this is why it's so important to get your pre-approval in place. And this is why I like people to talk to their mortgage brokers before they go out. Because the one lesson I have learned is to be pre-approved and be ready to write. Because when you go out and you find that home, the perfect home, it's always in your best interest to be able to write if that's the perfect home. Well, there you have it, a complete A to Z outline of the process of finding a great realtor, identifying the type of property that best suits your needs, and why having the right realtor, such as myself, is so critically important to helping you find the right home at the right price in the right neighborhood. To further your efforts to buy your first home, I have prepared a 66-page first-time home buyers resources guide, chock-block full of great material you won't find anywhere else, and I would be happy to send you a complimentary copy. Simply give me a call or send me an email and I can get you a copy right away. There's lots more to learn about, and I'm going to turn things back over to John Charbonneau, who will take us through the mortgage pre-approval process.
At this point, I get to switch hats from being your host to that of being your mortgage broker. For many first-time home buyers, the role of a mortgage broker might be an unfamiliar one. So let's take a moment and review what my role in the home buying process is. In short, I'm the money guy. You meet with me, we look at what your home buying goals are, and I make the arrangements to have your financing approved. I deal with banks, trust companies, credit unions, life insurance companies, and pension funds, all of which provide various types of financing. My job is to find the best mortgage for your needs, get a highly competitive rate, and show you which lender has the best product for you by showing you how their offerings compare with regards to penalties, prepayment options, and how the fine print from one lender to another can make a huge difference in the long-term cost of owning a home. One of the best parts of dealing with me is that my fee is paid by the lender, so working with me does not end up costing you anything. In short, I get paid by the lenders to offer you their best rates and terms. With that out of the way, let's get started with the financing process of buying your first home. Let's talk about your first challenge, saving for a down payment. Once you decide that home ownership is in your future plans, you'll want to set up a budget so that you can begin to save money for a down payment and to cover closing costs. A down payment is the portion of money that you will contribute towards the purchase price of your home. Saving for a down payment is a crucial step towards home ownership, and it will help you prepare for the financial obligations that are associated with it. The more you contribute to the purchase price, the lower the amount of mortgage financing you will require, and with a lower mortgage comes a reduction in interest paid to your lender. There are two primary types of down payment: money you have or will save, and money that is gifted to you by a family member. First-time home buyers should try to set a goal of saving between 5% and 20% of the purchase price. There are a number of government incentives. Let's talk about a current government incentive for first-time home buyers with respect to down payment. It's called the Home Buyers Plan and provides assistance for potential buyers to realize their dream of home ownership. It allows you to use your RSP for part or all of your down payment and to assist in covering closing costs. Qualified applicants can withdraw up to $25,000. Applicants have 15 years to repay the funds back into their RRSP. Applicants must be residents of Canada. Applicants must have an agreement to purchase at the time of the withdrawal. Money withdrawn from an RRSP under this plan must be on deposit for 90 days prior to the withdrawal. At any time, an applicant can repay any outstanding balance without penalty, and the funds must be used to purchase a primary residence for the applicant. The amount of your down payment determines the loan-to-value ratio. The loan-to-value is the amount of the mortgage loan compared to the value of the property. Typically, lenders will limit the loan to an amount less than 95% of the value of the property. Loan-to-value ratios are used by lenders to determine whether or not you will qualify for the loan, and if the loan will be classified as conventional or high ratio. Conventional mortgages have a loan-to-value ratio of 80% or less of the purchase price, and high ratio mortgages have a loan-to-value greater than 80% of the purchase price. If you are borrowing more than 80% of the purchase price, you will have a high ratio mortgage. and it must be insured so that the lender is protected in case you do not make your mortgage payments. Currently, there are 3 high-ratio mortgage insurance companies available in Canada: Canada Mortgage and Housing Corporation, CMHC, Genworth Financial, and Canada Guarantee. High-ratio insurance is often referred to as mortgage insurance or mortgage default insurance, and should not be confused with home insurance, which you can obtain on your own to cover the cost of the loss of your property or contents due to things like theft or fire. The mortgage insurance premium can be paid in a single lump sum when you close your mortgage, or it can be added to the principal balance and paid off as part of your mortgage. The insurance premiums are identical from one insurance provider to another. Each of the 3 insurers provides different policies and guidelines. A mortgage application declined by one insurer may be approved by another insurance provider. Not all lenders deal with all 3 insurance providers, and this can result in one lender turning down an application, but the same application presented to another lender could result in an approval. In addition to putting together a saving strategy, it is important that you establish and maintain a healthy consumer credit history. Your credit report will show the lender how you handle debt by providing information on how much credit you have and if you are able to make your payments on time. Your credit report is created when you first apply for credit or borrow, and it is tracked over time. The information is collected and maintained by credit reporting agencies, also known as credit bureaus. In Canada, there are 2 major credit bureaus, Equifax Canada and TransUnion Canada. A credit bureau may provide credit information via a report referred to as a credit report, and will provide a lender with a 3-digit number as an overall evaluation of your report and is called a credit score. Since your credit report provides an overall picture of your financial history, lenders and credit grantors will request a copy when determining whether to lend you money or grant you credit. Any negative information may adversely affect your ability to borrow money or obtain credit, so it is important to maintain a healthy credit history. Making your payments on time for all loans and credit you owe will contribute to your credit worthiness and present you as an attractive borrower to lenders. Generally, the higher the credit score, the lower the probability a borrower will be delinquent on payments of credit granted. The credit score is based on a statistical formula combining personal information from the credit report and other sources to arrive at a score ranging from 300 to 900. For those borrowers with less than a 20% down payment, the credit requirements have increased over the past couple of years due to the Federal Minister of Finance in Ottawa implementing policies to reduce the number of riskier loans offered by lenders in Canada. Loans that were commonly approved only a few short years ago are now being declined as a result of borrowers not having high enough credit scores. It is worth noting that it is a wise idea to review your credit to make sure the information is correct and to take the time to correct any errors that negatively affect your overall score. You are entitled to receive a free copy of your report by mail from each of the 2 major agencies. Reviewing your credit is something best done in the early stages of the home buying process, so that you have time to make changes either by correcting mistakes or improving payment history and your overall score. How much home can you comfortably afford? Before you head out with your real estate agent to look at homes, you need to determine how much home you can comfortably afford in total monthly housing costs. Your affordability depends on your income, your down payment amount, mortgage interest rates, and any other financial obligations you may have. The amount you can afford as a mortgage, plus the money you have saved for your down payment, will determine the price of property you can afford and will help you and your real estate agent focus on homes in your price range. To determine how much mortgage you qualify for, lenders will use two simple qualification ratios: the gross debt service ratio, GDS, and the total debt service ratio, TDS. Let's look at these ratios in greater detail. Gross debt service ratio includes the principal and interest component of your mortgage payment, property taxes, an allowance for heating, and 50% of the maintenance fees for condos. Provided all other conditions are met, lenders can allow a borrower to use up to 39% of their gross income to service the debt of a mortgage payment, property taxes, heating, and 50% of the monthly condo fees where applicable. In addition to the GDS ratio, a lender must consider any other monthly debt obligations for repayment of such items as credit cards, car loans, and student loans. When the repayment amounts are added to items included in the GDS, the total debt service ratio should not exceed 44% of the applicant's gross income. The ratio of 39% GDS and 44% TDS are considered the maximum allowable ratios acceptable to the high ratio insurance providers. This does not mean that every lender would approve a borrower to take on the maximum mortgage under these guidelines. To be approved for the maximum mortgage, a borrower would need to meet additional criteria such as income stability and credit history. The most important thing to take away from the discussion of affordability versus qualification is that a borrower might be approved for a mortgage larger than which they can actually afford. The best advice in this area would have the borrower prepare a monthly budget representing all expenses associated with their lifestyle and include amounts for food, clothing, entertainment, and vehicle expenses, to name a few. Once all lifestyle expenses are deducted from the applicant's net take-home pay, the amount remaining could be considered a reasonable budget for housing expenses. In this next section, we will review some basic mortgage terminology. A mortgage is a legal document by which a borrower pledges property to a lender as security for a debt. When borrowing money by way of a mortgage, the borrower will have the option of determining which method of borrowing works best for their individual needs, subject to overall qualification. Let's review some of the basic definitions. A closed mortgage, a mortgage with a fixed contract length. This type of mortgage will allow for partial prepayments over and above the regular payments without penalty. However, to pay this type of mortgage in full before its duration is over will involve a penalty. A closed mortgage will have a duration from 6 months to 10 years in length. A closed mortgage may have a fixed or variable rate of interest. Open mortgage, a mortgage that allows a borrower to repay any or all of the outstanding balance at any time without any form of penalty. An open mortgage may have a rate of interest that either fluctuates during the term or is a fixed rate. The length of contract will range from 6 months, 1 year, 3 years, and 5 years in duration. Interest rates come in two varieties. Fixed rates. The interest rate is set for the duration of the term of the contract at an exact amount. Variable rates are also known as adjustable rates or floating rates. A formula is created, and each time the prime lending rate changes, the interest rate for the borrower's mortgage will change by the same amount. Two final definitions. Term. This refers to the length of your contract. Terms range from 6 months to 10 years. The shorter the term, the lower the interest rate. Amortization. This refers to the total period of time you have to pay off your mortgage. First-time home buyers will typically start with an amortization of 25 years. Until a few years ago, amortization periods up to 40 years were available. However, these were recently discontinued as a result of the federal government tightening mortgage rules. The longer you amortize a mortgage, the lower your payments. But the longer you amortize your mortgage, the more total interest you pay your lender. Once you feel comfortable with your decision to go home buying and have a better idea of how much you can afford, the next step is to qualify for a pre-approved mortgage. A pre-approval is contingent upon the information you provide being verified by the lender. This is typically not done until the borrower has an accepted offer, and that offer will likely be subject to obtaining financing. This is referred to as a soft pre-approval. The disadvantage of a soft pre-approval is that the lender might interpret your documents differently than you have indicated on your application. A smaller amount of income might be used by the lender, and the mortgage amount you thought you were pre-approved for may end up being less than you need. The best alternative to this is to arrange a hard pre-approval. At the time you submit your application, a complete list of supporting documents are provided, so there is mutual agreement on the amount you are approved to borrow. During the pre-approval process, a major decision has to be made by the borrower. This major decision will revolve around selecting the terms of the mortgage. Will you go with a short-term, lower interest rate product or a higher interest rate for a longer term? Will you select a mortgage product where the interest rate is set for the term or may increase or decrease during the term? This is a critical process, and a mortgage professional like me can assist you with a thorough review of the pros and cons of each option available to you and provide recommendations based on your individual abilities and risk tolerances. Once a pre-approval is arranged, the borrower can take advantage of the following benefits. It offers confidence and peace of mind when house hunting. It enables the borrower to search in a specific price range and protects the borrower for up to 120 days in the event that interest rates increase. It is vitally important to remember that a pre-approval is not a guarantee of financing. Even if you have provided all of your income and down payment documentation to your lender in advance of making an offer to purchase. Ultimately, the lender and high ratio insurance provider, if your down payment is less than 20%, must approve of the property you are purchasing. Some properties might not be acceptable to the lender. It is important that you be aware of this when making an offer to purchase. A standard procedure is to make an offer subject to approval of a mortgage on specific terms. The following will outline the documents required to have your mortgage approved. While some lenders may not require these documents until you have an accepted offer, a wise practice is to review these documents with your mortgage broker or lender at the time of applying for a pre-approved mortgage. Documents for employment and income verification will consist of the following: a letter of employment, current pay stub, and your most recent T4 slip. For applicants that are self-employed, a lender may need to see your last 2 years of tax returns, notice of assessment, and company financial statements. To document your down payment, copies of your bank and or investment account statements covering the last 90-day period, a copy of a gift letter outlining funds that are being gifted from related parties. Your mortgage broker will compile all the necessary information and prepare a professional presentation to a lender on your behalf. One primary function of a mortgage broker is to locate funding for mortgage financing and to seek the best possible lender package to suit your specific situation and needs. Many homeowners, inexperienced in knowing what to look for in a mortgage, fail to see past the interest rate. Homeowners focused on just getting the lowest rate may fail to obtain a mortgage that is better suited for their needs with features and benefits that will ultimately provide for a lower long-term cost of financing. The majority of homeowners intend on paying off their mortgages as quickly as possible. Reducing the number of years until your mortgage has been paid off will reduce the total amount of interest paid to your lender and reduce the long-term cost of home ownership. All commercially available mortgages will have several different options available to pay your mortgage off faster. Each lender will have different options, and a professional mortgage broker can assist home buyers by not only negotiating excellent interest rates, but also ensuring that the right mortgage is chosen, thus allowing the borrower to take advantage of their ability to pay off the mortgage as soon as their cash flow allows. Here are a variety of techniques to pay your mortgage off faster than the initial amortization period. You can make accelerated biweekly payments, round up your payments to the next $50, double up your payments when available, and make annual lump sum payments on the balance of your mortgage. That pretty much wraps up our financing section. I have two additional resources available to you. One is a booklet entitled Home Buying Step by Step. It's a great consumer guide and also workbook. And for those of you that are looking at buying condominiums, whether they be an apartment style or a townhome style, we have the Condominium Buyer's Guide. To receive a complimentary copy of either or both of these booklets, feel free to give me a call at 604-818-2840. Although the process of buying a home can be overwhelming and daunting, the end goal of home ownership is well worth the effort and investment. I hope you found this section on financing both informative and easy to understand. With the right knowledge, I believe you will be better prepared to join the millions of homeowners in Canada in finding, financing, and eventually owning your home mortgage-free. My personal philosophy is that there is no such thing as a stupid question when it comes to financing your home. So, feel free to call or email me if you have any questions about financing your first home purchase. And with that said, it's time to look down the road on the way to achieving your goal of home ownership and envision that you've been pre-approved, found a home, and have an accepted offer. Now comes the home inspection. Our next presenter is John Schiffer, owner of Quality Home Inspections. John has been a home inspector since 1995, and before that was a general contractor specializing in major renovations as well as new construction. He knows his way around a building. In his presentation, John will be focusing on information that will come in handy when choosing an inspector and offer tips you can use when you're out looking at properties. Information that could help you avoid investing your precious time and money in a property that may not be suited to your needs. Please welcome John Schiffer from Quality Home Inspections.
Thank you, John. Hi, I'm John Schiffer. I'm a registered home inspector with the Canadian Association of Home and Property Inspectors and Consumer Protection BC. Today I'm going to give you a few tips to use when viewing a potential property, but first a bit about home inspections. Why get an inspection? An inspection will give you a professional opinion on the home's overall condition, along with some technical advice, so you can proceed with confidence and avoid costly mistakes. A home inspection is a visual investigation of a property intended to reduce your risk. Until recently, anyone could call themselves a home inspector. Now all BC home inspectors must be registered with Consumer Protection BC. This ensures that the inspector belongs to a recognized professional association, meets the association standards, and carries professional and general liability insurance. What to expect of a home inspection? All the principal components are inspected, from site drainage to the mechanical systems. The time required to do an inspection is based on the size, age, and complexity of the structure, typically from 2 to 5 hours. It is not a guarantee or a warranty. The written report will be presented at the end of the inspection to be discussed with the buyer. The written report will include all the deficiencies and to determine the age and life expectancy of some of the components, such as the roof or the heating system. How do you find an inspector? By referrals through family or friends, realtors, mortgage brokers, or search online. Now, by making yourself familiar with some common and potentially expensive building problems, you can save yourself a lot of time and money, such as lack of maintenance, drainage problems, buried oil tanks, insurance coverage concerns, mold, and toxicity. Some tips you can use when looking at properties. First impressions are very important, such as this house. I would say it's well maintained. This house, on the other hand, has not been well maintained. Excessive vegetation on the exterior is not good for the house and likely cause premature failure of the siding. This is also true for roofs. Vegetation and moss does not belong on roofs. Leaky condos are buildings built in the 80s and 90s. They failed due to lack of overhangs, poor waterproofing details at doors, windows, and balconies. All sidings are included, but particularly stucco. First impressions of this building, not well maintained. Leaky houses. Some houses built during the same 1980s, 90s period, especially stucco homes, had the same type of issues as condominiums, as you can see by the two leaks here, one from the roof, one from the exterior wall. A rain screen building can be identified by the horizontal flashing at every floor, as in this photo. Non-rain screen buildings lack this detail. They are more difficult to maintain, expensive to upgrade, and sometimes diligent maintenance is not enough to prevent them from becoming rain screened. Ceiling leaks in underground garages, if there is enough of them, can be very expensive to repair as well. When walking around the house, soil levels should be kept away from the siding and all wooden components, such as the supporting posts for decks. Older homes, in particular, when the drain tiles fail, may allow water to enter the basements and crawl space, such as this house. Basement leaks can show up as staining on the walls, also due to failed drain tiles. Stains on ceilings are caused by either a roof or a plumbing problem. Look for stains in closets in particular, as they are not well painted. This ceiling stain is due to a plumbing problem originating from the bathroom above. The most common room in the house to show water issues are bathrooms. This one shows an inspector using a moisture meter to determine how much moisture there is in the walls and the floors of the bathroom. Amateur work quite often results in all kinds of problems, in this case overheated wiring in an older electrical panel. Buried oil tanks, commonly found in older homes, can sometimes still be present today. The pipe shows the presence of an oil tank buried nearby. They are very costly to remove and are the liability for the vendor. Insurance coverage concerns. Outdated components can present problems when purchasing insurance for your new home. Older electrical knob and tube wiring, such as in this photo, some types of plumbing, such as polybutylene, and certain types of ungrounded electrical systems can be problems for many insurance companies, which might require the removal of some of these systems in order to obtain insurance. Asbestos was a common problem today and in older homes. It was typically used to wrap ductwork in heating systems, in drywall before 1980, in plaster, in some attic insulation, in old linoleum, and in exterior siding. Asbestos removal needs to be done by experienced contractors and adhering to strict safety standards. Mold, common throughout the house but can be quite common in attics. It is due to excessive moisture caused by either exterior leaks, plumbing leaks, lack of adequate ventilation. In this case, the attic mold is caused by inadequate ventilation and excessive air leakage from the interior of the house into the attic space. These are a few areas covered in an inspection. For more information, feel free to visit our company website at qualityhomeinspections.ca. Thank you for watching this webinar. I'm John Schiffer of Quality Home Inspections, wishing you all the best in your home buying adventures. And now back to John Charbonneau to wrap up your webinar.
Now that you've found your first home, made your offer with the assistance of a realtor, secured the financing with a mortgage lender like me, and removed your subject condition following a successful home inspection, it's time to turn over the process to the legal professionals that will make sure your real estate transaction closes properly. Our next presenter is Richard Bell. Richard is the primary owner of Bell Alliance, a law firm in Vancouver, and he has been helping homeowners with their closings for over 2 decades. And he joins us now to take us through the legal process and demystify the final stages before you get your keys and move into your new home. Over to you, Richard.
Thanks very much, John. Buying property for the first time can seem a bit scary, so my job is to try and make it a bit less scary. I'm going to focus on the purchase of condos. So here are some things to keep in mind. First of all, I always recommend that you ask your realtor to review a contract of purchase and sale at the start of the process. Once you find something you like, you'll probably be too excited to really take a close look at the contract. You'll focus on price and closing date, but there are other parts of the contract which are important to understand, particularly if you are buying new construction. For new condos, make sure you read the disclosure statement. This document talks about the project and what the buyer can expect when the project is complete. With pre-sales, in other words where you're buying before the project is complete or even started, there are some things to watch for. The developer can only estimate the closing date, so you need to be aware that the date when you think you are moving may in fact be delayed by 30 to 60 days. And most contracts provide that the developer can give you 10 days notice to complete. So this may cause you a bit of a problem if, for example, you're renting, as you will not know with confidence when you should give notice to your landlord. You also need to be aware if the delay is very long, there may be an issue with your interest rate commitment. Normally what happens, you get pre-approved for your mortgage and the lender will commit to an interest rate for a fixed period of time. If a project is delayed in a rising interest rate market, your interest rate commitment may expire, resulting in an interest rate higher than you expected. So something to keep an eye on if construction is delayed. Your mortgage advisor will also be watching this situation. The contract will also contain provisions that allow for a variation in the size of your unit and balcony. So you need to be aware that the unit size and configuration could change a bit. Usually the agreement allows for a 5% variation without any adjustment in the purchase price. Parking stalls are another item that causes some frustration, as the developer normally will not commit to a particular parking stall until the closing date. So it really is a question of crossing your fingers and hoping you get a good stall. The same thing applies to storage locker. So if you're buying, if your purchase price includes a storage locker. In terms of parking stalls, the developer may accept an offer that says that the parking stall will be of an average size as opposed to one of the small stalls. For resale condos, make sure to read the last 2 years' minutes closely. You're really looking for two things. Are there potential repairs that could result in a special levy? And what is your community like? Are there complaints about animals, noisy neighbors, or unusual smells coming from a particular unit? You might not want to buy the unit beside the noisy strata owner or the one with the rather sweet-smelling smoke emanating from their condo. And there's some new legislation which is really helpful for condo buyers. So on December 14th, 2011, the province enacted new legislation requiring strata corporations to obtain depreciation reports unless there's a 3/4 vote to waive the requirement. I suspect most stratas will obtain these reports, as buyers may be reluctant to buy into a complex where there is no report. The objective of the legislation is to avoid large surprises with special levies for owners of stratas. The report must contain, first of all, a physical inventory of the common property and assets, and anticipated maintenance, repair, and replacement for common expenses literally projected over a 30-year period. And finally, a financial forecasting section where there's at least 3 cash flow models. So a great addition to the legislation that provides additional protection for buyers of condos. Let me just talk briefly about insurance when you're dealing with condos. There's 2 types of insurance policies. One is the master policy. It covers the entire building. It's paid for as part of your strata fees. The other is your personal policy, the strata owner policy. This is really an important policy as it protects you in terms of damage to your contents. Rental costs, for example, if you need to move out while some damage is being repaired, you're now paying your mortgage plus paying rent. And most importantly for liability, if you do something in your unit that causes damage to other units, there will be provisions to cover those damages. So it's really important that you talk to your insurance advisor about these items. So let's go back and just talk about the contract of purchase and sale for a moment. There's really 4 important dates in a contract. One is the subject removal. You've got subject to financing, subject to review of minutes, subject to inspection, those sorts of things. The next date is the completion date. This is the date you have to pay the seller, which is handled through your lawyer or notary public. Then there's an adjustment date. This is the date that you become responsible for costs, for example, strata fees and taxes. And finally, the possession date. What is the day in which you get possession? Possession and adjustment dates are usually the same, and they take place usually a day or two after the completion date. So then we come to the costs. What are the costs going to be in addition to the purchase price? Well, there will be adjustments for strata fees and tax adjustments. There will be property transfer tax. This is a provincial tax. It's 1% on the first $200,000 in value and 2% on the balance, unless, of course, you qualify for the exemption as a first-time buyer. To qualify, you must have never owned a principal residence anywhere in the world. You must be a Canadian citizen or permanent resident and have resided in BC for at least 12 months. There's a full exemption for properties under $425,000 and a partial exemption up to $450,000. At $450,000, there is no exemption. If one person qualifies but the other does not, we often structure it so the person who qualifies becomes a 99% owner, the other person a 1%, and therefore we get the benefit of most of the exemption. And then if you're buying new construction, there's GST. This is a 5% tax, and it applies on the purchase of new condos. There is a rebate for this for properties that are under $450,000. It's basically 36% of the 5% for all properties under $350,000 in value, and declines to 0 up to $450,000 in value. So one of the other things you need to think about is how are you going to hold title? You can hold title as joint tenant or a tenant in common. A joint tenant is where you jointly own 100% of the property. So couples buying together, that's the most common form of ownership. The other way you could own title is as a tenant in common. So for example, if two couples are buying a property together, a house together, because they can't afford to buy one independently, they may each own 50% of the property. And as between themselves, for example, one couple would own their title as joint tenants, but 50% as a tenant in common with the other couple. The closing process, what's that all about? So once you've found your home, arranged financing, removed your subjects, here's the next steps. You need to find a lawyer or notary public. Talk to your realtor or mortgage advisor. They'll know the firms that in fact practice in real estate. The real estate office will send the contract to the lawyer. Financial institution will send mortgage instructions. The lawyer or notary will then be in touch to gather certain information that they need from you. A couple of days before closing, you'll be meeting with your lawyer to sign documents and pay the balance of funds. You do not go to the lawyer's office on the completion date. He or she will close the transaction and notify you that you are now the new owner. Your realtor is the one who provides the keys on the possession date, so you just need to make sure you've got that arranged in advance. So what's all this going to cost for a lawyer or notary? First, a lawyer who practices in residential conveyancing and a notary public are all competitively priced. Some lawyers are cheaper than notaries, and conversely, some notaries are more expensive than lawyers. Your legal fee will range from $650 to $850 for a purchase with a mortgage. Some firms do offer a bit of a discount for first-time buyers, and your disbursements will range from $250 to $350. Remember, buying a home is one of the most expensive items you will ever buy, so be sure to hire someone with lots of experience, as sometimes things unfortunately can go wrong, and that experience really comes in handy. So what's the best advice I can give you? Build a team of professionals to support you throughout this process, and if they know each other, all the better, as they can then work together to ensure you are protected. I hope this helps. Thanks very much.
Well, ladies and gentlemen, there you have it, your first-time homebuyer webinar. As you can imagine, there's a lot more information you are going to need to make an informed decision about buying your first home. Speaking on behalf of our presenters, we welcome your additional questions by email, and we will do our best to get back to you with the additional information you're going to need to make your first home purchase an easy process and an excellent investment. Best of luck in your home search, and don't forget to send us an invitation to your housewarming party. We'd like to join you and celebrate your first home purchase.